All right, breaking just moments ago, the jobs report surpassing the expectation this morning. New data showing 115,000 jobs were added last month. All right, CNN's Matt Egan joining us now. Put this into perspective for us.
Well, Sarah, look, the job market, it slowed down in April, but not nearly as much as feared. This was a big beat for the job market. Look at this. So the U.S. economy adding 115,000 jobs in April. That's almost twice as much as the consensus from economists. Again, it is a slowdown from March, which was actually revised slightly higher, but this was better than expected. Also, February was revised even lower. It was a negative number previously. It's an even bigger negative. You see, that's that bar right there going straight down. But the fact that it's gone up 2 months in a row, that's going to really, I think, increase the confidence that perhaps this job market has stabilized after a pretty weak 2025. Now, let's look at the unemployment rate. The expectation was that it would stay at 4.3%. It did stay at 4.3%. This is also reassuring because it shows that after this significant increase in the unemployment rate in 2023, 24, 25, again, it has stabilized, and that is a good sign. Now, when we look at the various industries, healthcare, that continues to be a major source of demand for workers in the U.S. economy. That reflects this aging economy, this aging workforce as well. 37,000 jobs added there. Leisure and hospitality, that's bars, restaurant, hotels, adding 14,000. That's encouraging because if people were really pulling back because of high energy prices, that's where you might see it first. It's not showing up, at least not yet. However, other parts of the economy, Sarah, are actually losing jobs. Manufacturing, obviously a key focus of the president's, losing 2,000 jobs. And look at these last two, finance and information, losing a combined 24,000. That stands out to me because both of them have been early adopters of artificial intelligence. And there's all these concerns that AI could take away from jobs. And even if it's not taking people's jobs, companies are spending gobs of money on AI, and that's taking away from some of the money that they could be spending on human workers. So that's something to pay attention to as well. So you put it all together, and I do think that this is reassuring, but we got to remember, this is just a snapshot. This is telling us what the job market looked like back in mid-April. And we know that energy prices, gasoline, jet fuel, diesel, have only gone higher since then because of the war. So it does seem like it's too early to sound an all clear for the job market. I think the trillion-dollar question is, what happens next, right? Can the economy continue to just power through shock after shock? Or does this war in the Middle East and spike in energy costs start to slow the job market down?
You know, I think there's so much confusion. This has been a really confusing time because you're seeing, you know, for example, the stock market has been pretty much booming. I mean, it really hasn't lost. If anything, it's grown. Then you look at this, and then you look at what CEOs are saying about people not spending.
Yeah, well, we've heard a whole bunch of CEOs in just the last few days warn about weakness from consumers, right? McDonald's, Planet Fitness, Whirlpool saying they're seeing recession-like demand for appliances, and they were blaming the war. So again, I think we still have to wait and see how the war plays out and whether or not all this pressure on consumers spills over into the real economy.
We will wait and see. I know you'll be here throughout all of it. Matt Egan, thank you so much. Appreciate it.